Low volatility funds have become a high anxiety trade of late. Now here's the background. Financial academics have long known that investors systematically overpay for glamorous but risky moonshot stocks, and they undervalue boring mature companies. So by simply buying more of the latter, investors can over time generate above market returns and crucially with less turbulence. And that realization has given birth to a clutch of low volatility ETFs, which have proven phenomenally popular in recent years. But after a strong run, their promise has started to unravel this autumn. The S&P 500 Low Volatility Index has fallen 5.2% since the beginning of July, compared to the broader market's 2.2% gain. Nor have these ETFs proven as tranquil as their name implies. And here's a chart showing the 30-day volatility of the supposedly low vol index and against the broader market. And as you can see, the low volatility gauge has actually been choppier than the S&P 500 since around mid-August. Basically, these strategies just proved too popular. Yield-starved fixed income refugees have in recent years piled into steady dividend-paying industries such as utilities and real estate, and these make up a big chunk of low vol ETF holdings. But valuations just became so stretched, and when the momentum reversed this autumn, low vol ETFs took a beating. And this setback has naturally dented their reputation. BlackRock's USMV, the low vol industry's biggest vehicle, celebrated its 5th birthday this week. It's taken in the 3rd biggest inflows of any US equity ETF this year. But its outstanding shares, a good gauge for its popularity, have declined since the summer and slipped heavily in October as investors yanked money out. Now this shakeout will probably continue for a little bit longer. According to the latest Bank of America survey, investors think the strategy is the 3rd most crowded trade in markets, after high quality stocks and investment grade bonds. But readings for both of those markets actually fell last month. Also, the low vol made its very first appearance on the crowded list. Low vol ETFs will probably stage a comeback once the shakeout is complete, as the academic evidence underpinning the strategy does remain strong. But the woeful recent performance is an excellent example of how crowding can sabotage even the smartest trades, because in markets there simply aren't any magic money trees.